Alrighty, good morning everybody. What is this, Friday, September 16, 2022. Let's take a look at the market here. Hey, I want to reach out and thank everybody. I really appreciate it. I've noticed a few people here checking in on the Twitter, the Facebook, the YouTube, the LinkedIn. I haven't checked out in a couple days, but we send some charts. Instagram, yeah, thanks, Instagram. We've sent some charts and videos over there the last few days, and I've recognized a few names that have liked it or retweeted it, and I can't even begin to tell you how much I appreciate it. That whole social media business is a nightmare to get going. It really is. So I appreciate all the help that you guys. I really appreciate all the guys you got. All the help you're giving me. It takes a village. Yeah, it does, doesn't it? It is amazing. It is. It's great. Okay, so let's talk stocks. So here's what we're going to do. A little bit later this afternoon, we're going to talk about swimming upstream. Here's the market moving down, pretty clear. Everybody can see that. But what about trading stocks that are actually moving up? Well, we're going to talk about that. Okay. So we're going to do that this afternoon. I'll announce plenty time when that's going to be, and it'll be toward the later side. Hey, John, good morning. John there, for those of you who don't know, John Cape Coral there, John runs the free trading room over there. Does a bang-up job, by the way. I've learned a couple things from him. Very nice, John. Appreciate it. Really appreciate it. Okay, so let's talk about today. And today's Friday. I think today's going to be a wacko day. I really do. You've got a bunch of witches running around. The market, the bears have control. Buyers are going to try to buy in there. FedEx is grounded. Oof, man, FedEx is grounded. Yikes. And so it's going to be crazy. So I think one thing we have to admit to ourselves, the trend is down, absolutely, no questions about it. By the way, I look at the trend is I do look at trend lines, and you see we're down here. Price is underneath the T-line. The T-line is underneath the trend indicator. And in this case, I'm going to also use that 50-period moving average that we are under. That right there just reeks of bear control. It is total bear control. Not only is it technically bear control, but it's psychologically bear control underneath that 50-period moving average. So all the charts today have taken that in mind. Now, last night on one of all of them, I guess, social media networks, I posted a little video on the inverse ETFs, and that's all we're going to look at today, right here. So let's take SPXU. We like trends that are trending up, and I am a firm believer. And I mean, I've over a year's time, I talked to an awful lot of people, and over my years of training, which hasn't been 34, more like 25 maybe, something like that, of actual training, more people would rather trade long. And that's okay if you have the right instrument to do that. So an inverse ETF, what it does is, this is for the S&P 500. So if the S&P 500 is moving down, this is an instrument that you can trade up and get a similar reaction. Okay, you're going with the flow. I know it. Sometimes it might seem like, how's that right? Well, it's made to do that. It flipped over so that instead of going down, when the S&P 500 goes down, this will go up right here. And there's several of these. It's not just one. There's a couple of different ones. One of the biggest things that I think is a benefit here is if I'm going to short the SPY, I'm looking at $283. That's a chunk of change. Now, for some people, that's just folding money you keep in your pocket, and that's cool. But for not everybody is this folding money you keep in your pocket. That's a lot of money. So one way to get around that is take a look at that inverse ETF. So now let's take a look at it. That's a beautiful trending bullish chart. We've got a very nice trend here. And when I draw a trend, I usually do things like that. There's nothing really it's tied to. I mean, I can clearly see it's a trend, and I just want to get it close, okay? Now, here's where I will draw a trend a little closer, and I'm going to draw right up here like this right here. And then we're going to follow price action and targets on the way up, okay? So that's what we're going to be looking at today. And a little bit later, what I'm going to do is come in and put all the details in for you. A drip is one. Drip is one of these. This is a energy, oil, gas. It's a bear. Here's one thing I would strongly recommend is do your research on these, because you see where it says 2 times. You need to research what that means. You'll see some of them that say 3 times. You need to research what that means. Google it. It's really easy. They're really easy reads. Read a couple articles. Make some notes. Just before you go trading those, just learn a little bit about them, okay? I think that's important. Another one is SQQQ. Yeah, SQQQ. So if the Qs are moving down, and you can't afford to spend money on, say, QQQQ, look at that, $287 right here. That might be a little spendy for your account. So you might not want to do that. Also, some people just simply do not like to trade. Some people trade short, and it is what it is. Some folks, their account actually is not allowed to trade short, some accounts. So looking at, say, where did it go? SQ right here. Looking at SQQQ is a way to get around that. It forms a trend. It obeys trend lines. It obeys moving averages. It acts like price action. It's the same thing. It's a 4-legged animal, just like the Qs are. They eat the same thing. They talk the same way. Everything. So I'm looking for this one to move a little bit higher here. Again, we'll come back and take a look at it. FNGD, this is another one here that has become very popular. Inverse ETF of the FNGU, or what they call the FANG stocks. This is moving up really nice. So these are terrific charts to take a look at when the market is down, if you would like to only trade long. Okay, these are terrific charts here. Alrighty. Hey, I need 1 second. Bear with me 1 second, and I'll be right back.